You're welcome to my channel. In this video we are going to be having an example on company accounts. So this is the question. The question says the balance sheet of Nature Limited as at 31st December 2023 showed the following position. So we have the assets where we have bank, it had 600 million. Then under equity we had share capital of 300 shares at UGX 1000 each. So this value that is given in the balance sheet is the nominal value or the real value of the shares. So share capital of 300 shares at 1000 each. So when we multiply 300 times 1000, it's why we get this 300M. Then we have reserves of 200M, and under liabilities we have loan of 100M. Then additional information, part A says the company made an issue of 20,000 shares. Applications were received for 32,600 shares. The board decided to refund the extra 12,600 shares and allot the remaining on a pro-rate basis. The shares were issued at a premium of 20%. So the nominal value of the shares is 1,000, but they were issued at a premium of 20%. So meaning we get 20% of 1,000, then plus 1,000 to get the issue price of the shares. Then part B, that's saying a bonus issue of 1 equity share for every 2 equity shares was made from reserves. Then part C, a rights issue of 1 equity share for every 2 shares was made at 1,200 per share. Then part D, they were like 50% of the loan was converted into equity shares. And they're saying that the above actions were duly taken by the company consecutively in their order shown. So they are in the order. Part B came after part A. So you cannot deal with part B before dealing with part A. You have to follow the order. Then they want us to determine the effect of the board of directors resolution and the statement of financial position for Nature Limited. So here they want us to prepare the company ledgers and then also show how it affects the balance sheet. So meaning we shall have to prepare the balance sheet again at the end. Yeah, so that's the question. So we are going to start with one by one. We can follow the what? We can follow the steps of issuing shares. We said when shares are issued to the public using the prospectus, which was done here, the company made an issue of shares. There is no accounting entry. So they made an issue of 20,000 shares. Then they said applications were received. So we start from here on share application. These are the accounting entries. So these are the ones that we are going to deal with. On receiving the money, it was for 32,600 shares. Then the board decided to refund the extra because they issued this but they got applications for this. So the difference between this and this gives us this that was supposed to be refunded. So the second step is receiving the money, then refund. So it's what we are going to deal with. Yeah, but then we can start by preparing the ledger accounts. So when they give you a balance sheet, what you are supposed to do, you go under assets, you only choose bank. They can give you a balance sheet whereby it has other assets like machine, plant, furniture, stock. You only take bank. It's what we are interested in. Then under equity and liabilities, you take everything. Yeah, but for the assets, you only take bank. It's what we are interested in. So the first step that we are supposed to do is to prepare the accounts. So we start with the bank account, then share capital, reserves account, then the loan account. That's what we do. So bank account, debit, then credit. So the bank is an asset, it has a normal debit balance. So the balance brought down is this 600 million. Like that. Then the second one is the share capital account. Share capital account. Everything under equity and liabilities, they have a normal credit balance. So share capital account, the balance brought down will be this side, which is 300 M. Like that. Then we have the reserves account. Debit, then credit. Balance brought down is 200 M. Then we have the loan account. Debit, then credit. Balance brought down, it is 100 M. Then we also prepare another account called the share application and allotment account. This one is prepared whenever shares are issued. And allotment account. Debit, then credit. It has no opening balance. Then we also prepare the share premium account since the shares were issued at a premium. Debit, then credit. It also has no opening balance. Yeah, so that's the first step. Then the second step, we go to the company made an issue of shares, applications were received. So we said here, on application of the money, on receiving the money, we debit the bank account, we credit share application and allotment account. So receiving the money that was received was for 32,600 shares. So here we are going to multiply with the value of the shares. They said shares were issued at a premium of 20%. So the nominal value of the shares was 1,000. So they were issued at a premium of 20%. So times 20 out of 100, which is 200. They were issued at a premium of 200. So in order for us to get our issue price, we get 1,000 plus 200, which is 1,200, like that. So here we multiply 32,000 times the issue price, which is 1,200. So we multiply 32,600 times 1,200. That's the money. So it is 39,120,000. So that's the money we debit the bank account and share application and allotment. Yes. So we come here, debit the bank account, we write there share application and allotment 39,120. Then we come to the share application and allotment. On the credit side, we write bank 39,120. Like that. Then we said on refund of the money, we debit share application and allotment and credit bank. So they have told us the company decided to refund the 12,600 shares. Since the company issued only 20,000 shares, but they received application of 32,600 shares, meaning there was an excess in application, so they have to refund the excess. So this minus this, we get this. So they will have to refund that excess money. So on refund, they're refunding 12,600, money for 12,600 shares, like that. So we multiply 12,600 times 1,200, which is 15 million. Like that. So that's the money that will be refunded. So we debit share application and allotment and credit bank. Since they are refunding the money, meaning the money is going out of the bank. So here we write share application and allotment. They are refunding 15,120,000. Then we debit the share application and allotment bank 15,120,000, like that. Then they are saying after refunding they will allot the remaining money on a prorate basis. So they have told us the shares were issued at a premium. So here under allotment of shares, we have the one for at par, for discount, then for premium. So we are going to use these accounting entries for premium since the shares were issued at a premium. Yeah, so we debit a share application and allotment account, we credit share capital account, and we credit a share premium account with the premium value. So we debit the share application and allotment account with these shares. These are the shares that were allotted or that were distributed. So 20,000 shares times the issue price, which is 1,200. So 20,000 times 1,200. What you get is 24M. So we debit share application and allotment with 24M. Then we credit share capital account with the nominal value. So the nominal value of the shares is 1,000. So 20,000 shares times 1,000. You get what we get is 20M. So we are going to credit share capital account with 20M. Then we credit share premium account with the premium value. The premium value is this extra 200 that was added on the nominal value. So it will be 20,000 shares that were distributed times the 200, which is the nominal, which is the premium value. So it will equal to 4M. Like that. So we are going to debit share application and allotment with 24M, credit share capital with 20M, credit share premium with 4M. When you add 20M and 4M, you get 24M. You get that. So we come here under share application and allotment and we write share capital. We can separate it. Share capital, it is 20 million. Then share premium is 4M. Like that. Then we go to the share capital account. On the credit side we said, and we write share application and allotment 20M. Then we go to the share application account. On the credit side we write share application and allotment 4M. So this one I separated it, but you can still write it as a whole. You just write share allotment, but you cannot write the word allotment under the allotment account. That's why I did use it. So it's a reason that's why I separated it, the 20M and the 4M. But when you add the total, it gives us this 24M that we got here. So hope you understood that. So this step is done. We go to the second step. They said there was a bonus issue of 1 equity share for every 2 shares made from reserves. So we have bonus issue. They said 1 equity share for every 2. So 1 equity share for every 2. For every 2 shares. So we multiply. Here we multiply by the number of shares available in the what? In the share capital account. So this time, this plus this, it gives us 320,000 shares. Remember, in the share capital account we only use the nominal value. So the nominal value is 1,000. So meaning we have 320 shares. When we multiply by 1,000, it's when we get the 320 million. You get. So this is treated as 300 shares, but when we multiply by 1,000, it gives us 300M. And this is 20,000 shares. When you multiply by 1,000, it comes to 20M, like that. So here the number of shares will be this plus this, which is 320,000. So 320,000. What we get is 160,000. So we multiply times the nominal value to give us 160M, like that. So that is the bonus issue. Yeah, you multiply with the current value that is in the share capital account. So we say on bonus issue, what do? We debit the source and credit share capital account. So this time they told us that the money is being gotten from the reserves account. So we debit the reserves account with 160M. and credit the share capital account with 160M. So we come here, share capital account, we write bonus issue 160 million. Then we debit the reserves account with bonus issue is 160 million, like that. Then this is done. Then the third step, there was a rights issue of 1 equity share for every 2 at 1,200 per share was made. So the rights issue was at 1,200 per share, meaning it was issued at a premium since 1,200 is greater than the 1,000, which is the nominal value of the shares. So they were issued at a premium. If it was like 900 shillings, it would be at a discount since 900 is less than the 1,000. So rights issue, they said it's 1 equity share for every 2. That's how you write it. Then times, we multiply with the number of shares available in the share capital account. So it is 300 plus 20 plus 160. So it gives us 480,000. So 480,000 shares. What do we get? $480,000 divided by 2 is 240,000. But they've told us that they were issued at 1,200, so times 1,200. What do we get? Times 1,200. It is 288 million. Like that. But they were issued at a premium. So here we say rights issue, when it's done at a premium, we debit the bank account with that money, 288 million. Then we credit share capital with a nominal value, meaning we are going to get those shares of 240 times, we get these times 1,000, which is the nominal value. So times 1,000. It gives us 240M. Then we also credit the share premium account with a premium value, so 240 times the premium value, which is 200 shillings. So 240,000 times 200, what you get is 48M. So we are going to debit bank account and credit share capital and then share premium, like that. So we come here in the bank account and we write rights issue. It is 288 million, like that. Then to the share capital account we write rights issue. It is 240 million. Then to the share premium account we write rights issue. It is 48M, like that. Yeah. Then this is also done. Then they've said 50% of the loan was converted into equity shares. So this is the loan that we had. Where is our loan account? It is here. The opening balance was 100M, but they're saying 50% of it was converted into equity. So meaning equity is increasing. So we come this side and write loan was converted into equity. 50% of 100M is 50M. So we credit here and debit here since this one is reducing. So we write here share capital of 50M, like that. So that is also done. So the additional information is done. So the next thing that we do is to balance these accounts. So we balance the bank account. This plus this plus this, what we get is 927 120. So this minus that, what we get is the balance carried down, which is 912 like that. Then this side we just add all these, and what we get is 770M. We bring it this side, it becomes the balance carried down. Then this side, for the reserves account, this side has 200M. So 200M, 200M, this minus that, the balance carried down becomes 40M. Then for the share premium account, 48M plus 4M, it is 52M. Balance carried down is 52M. The loan account, this side has 100M, 100M, 100 minus 50M, balance carried down becomes 50M. Then for the share application and allotment, after allotting shares, this account has to balance. So this side should be equal to this. So 24M plus this, we get 39 120. And this side also has 39 120. Like that. So this account has no balance carried down since it is balancing. So that is it. Then after balancing everything, that's when we prepare the balance sheet. Balance sheet. So we have the particulars, then we have the amount. So for the balance sheet, under assets, we had bank. Bank, it was 600M, but now it is the balance carried down, which is 912 million. Like that. Then equity. We write the total assets. Total assets is 912 million. Then we have equity. Equity, we have share capital. We only write the balance carried down, which is 770M. So 770 million. Then we have reserves of 40 million. Then we have share premium. Share premium of 52 million. Then we go to liabilities. we have a loan of 50 million. Like that. So when we add the total equity and liabilities, we get 912 million, which means it is balancing. Yeah, the total assets equal to total equity and liabilities. So that is how we do a question when it comes to company account. Hope this video has been of help. Thanks for watching. Do not forget to subscribe, like, comment. Let's catch up in my next video.